And now, guys, it's time for us to get our learn on. What we have here is our final, I guess, our third segment when it comes to strategies that you can apply as a beginning trader. It's going to be part 3. We've talked about a couple before, but it's going to be talking breakouts. And it seems like a simplistic strategy. Everyone kind of understands what a breakout might be. But breaking it down and then understanding how to capitalize on different types of breakouts, what we want to get into here. So what's going to be in this particular rundown? Are all breakouts the same? Yeah, okay, break a price level, go long, go short, whatever it might be. But what about all-time high breaks, point 2? Because then you're in uncharted territories as opposed to having obvious levels. And then another one, which has been discussed a heck of a lot here, and that's multi-day breaks. Do we like them more? Do we like them less? How do we execute around those? So overall, we're going to break down not just the differences between these types of breaks, but most importantly, how you are going to want to trade them and put this important tool in your trading toolbox.
So I'll get started with, like, are all breakouts the same? The answer is no, because a lot of the times what you're going to see, or very few times, are you ever going to get a clean break that just completely goes. And a lot of it has to do with the fact, is there volume from previous sessions that the market is respecting? So a couple examples here. We'll put out Lucid versus Home Depot. They're both breakouts, they're both multi-day breakouts that have been setting up for a while, but they're not traded the same way. You can't look at them the same way, because let's look at Home Depot. Up huge, up 6% almost on the day. It's been going sideways, and this is the way I would look at it too. It's been going sideways for a while now. Since late October, it's been going sideways, about 375, 376, and here we are, moving around, not a whole lot. When it does this kind of movement, you gotta be wary of the first break. So what do you do when it hits the pre-market session? Well, in the pre-market, if we got back above, it means if we got above the range, or the top end of the range, it means we've already seen what's above there. And if there's not a whole lot, the market comes back down. And now when we do it in the regular session, we are able to grind through back up through the pre-market high. Now the trade is on. This is different because this one was checked in the pre-market. The levels that were new were checked in the pre-market. But Lucid is quite different, because Lucid, we're looking at 45 on the top end, or 46. They tried that in the afternoon yesterday, complete failure. And today, it never even got back to that point, which was around 45 or so. So the fact that we got close and we had done a failed breakout yesterday with a move back down to close enough of an area today allows for you to just jump on board and take that ride upside. Now, Sean was trading this, I was doing something else, but the opportunities between the two trades are different, because Home Depot was setting up for so long that you have to be careful. And once it checked in the pre-market, you know, once the market opens, you're good to go if the volume is going to stay on the buy side. Lucid is a little bit different because of how it failed after trying that yesterday, right? A little different. So things to keep in mind when you are looking at different types of breakouts.
So I see some comments too that there is some talk about wanting us to post these. We will post these. So these will get posted up every weekend. We do drop these out. So thanks for watching. Point number 2, what happens when you break all-time highs, right? What is the next strategy? It's all clear ahead. You don't have anything. So we're going to look at Microsoft right here. Now imagine you don't see any of this. You have to sort of discount everything from this side over. I'm going to talk about the first break, which happens right here. So Microsoft every single one of these ticks is a new all-time high. But you finally get a break. We bounce off 295, comes back in, and then breaks it this day, that 295. Look what winds up happening. Ticks up to 305. So I was going to say, when you get in on all-time high breaks, you actually have to say, you know what, I'm going to get out. So you get in there. If it doesn't go one day, that's fine. But if it comes back in, you sometimes, well, not sometimes, most of the time, the best strategy would be to get out on the candle of that day break. So right here, you're seeing this break here, 295, breaking on August 19th. The bottom of that day, 289. So you go long and you don't get out until it breaks back below 289. Unfortunately, that only goes up $10 and then hovers here. So on this trade, if you take this 295 break, you actually hold this until you get stopped out. So this break here doesn't really work. You take the 295 break, it goes in the money, $10. If you want to take it, you could take it. For me, $10 on a $300 stock, you're probably looking for a little bit more. So Microsoft actually fails here. So you get out right there on that open. So how much do you lose? $6 maybe. Okay, not bad, right? Then what you're doing now is you say, okay, now I'm gonna wait for the next all-time high break. This time it breaks right here, 306. So your out would be somewhere around here, 302 and change, something in that area. So when that hits, now look at the upside. It never gives back that whole break. So now you lose $6 on this example, right? You go back in on a strong name that you believe in, and this time you're long at 306 on this break, and it never comes back in. All these wicks, forget about them. The market has to close below. So all these wicks, I don't even know if they happen. We chart D-prints. So there it is. There's a 306 break. You're not out, and now you're at 340. So right there, there's $34. So it doesn't work this time. You use that candle, you back test it and get out right there. That's a $6 hit on Microsoft. But you say, you know what? I want to get back in. Once it explodes back to the upside, you take the next day break right there, and now you're enjoying it to the upside because there is no upside. It's clear sailing. Remember, these are all-time high breaks. So if you want to take the same thing again right here on Microsoft, you take the 340 and you're going to get out if it breaks back down below 334. Otherwise, you enjoy the upside on the way up. That's how I trade all-time high breaks.
Yes, all-time high breaks, giving you good trades and good swings. Last one here, just going to quickly talk about a multi-day breakout. Going to go over to Prague because just today, it gave you a great opportunity, just as we were taping this. You have on the daily chart here $4.10. Then you came in the pre-market, and it made a nice 410 top just before the market opened. That sets you up for current pre-market high and previous multi-day level there at 410 for a clean break. And the way that I would approach that and did in this particular case is if you're taking a multi-day break, look at the next level on the daily chart. That's 450. That's where you're getting your out. You then get another breakout on that same price when it stalls there, same setup, another 450 break, and then you go all the way back to the daily chart for the next out at about $5, and then it goes right up to that $5 mark. So that's more of a quality day trading or short-term swing trade type of idea there for you. So we learned about different types of breakout trades, how to differentiate between them. We talked about the probably the granddaddy, the all-time highs, buy high, sell higher, right? Something like a Microsoft, you could hold on to that for life. And then, of course, the multi-day level break there, guys. So a lot to cover, and I hope that you guys learned a little bit something there from, I think, one of the most important tools in the trader's toolbox, and that's that multi-day breakout trade, guys.